Welcome, everyone. My name is Scott Meyers, and I am happy to present to the New View Trust Summit my favorite topic, self-storage, and how we create recession-proof cash flow in real estate without the hassles of tenants, toilets, and trash. So over the next 15 minutes, I'm going to share why just exactly this is and why you should be investing in self-storage right now. And that is because it outlasts the recession and outpaces the real estate investment trust sector growth, just like it did, as this article reported, in 2012, like it did from the Great Recession in 2008. And why right now extra space storage is the fastest growing real estate investment trust in the recession resistant industry, and why the Wall Street Journal shows that investors are moving and flocking into self-storage because of what is going on, not only with the pandemic, but because of the onset of this recession that we find ourselves in, and how National Real Estate Investor shows that self-storage survives, not only survives, but thrives during this COVID-19 pandemic. And that's because self-storage is a touchless rental. We have kiosks that run our facilities, and the interaction between our clients is one in which we do not have to touch them. As a matter of fact, technology handles it all, and therefore it has been the least affected by this virus, and also why, as we head into a recession, it outperforms all other asset classes because it creates demand for self-storage. And that is why it is considered the recession-resistant opportunity during these times, says Brian Somoza of JLL Capital Markets. That's because businesses and individuals downsize during a recession, and their extra stuff goes to storage when they move in with each other. Private lenders right now are pulling hundreds of millions of dollars from Wall Street to invest in this asset class, and sellers that have held on are grabbing cash by selling their properties, those mom and pops that may be scared right now because of what may be happening in the investment landscape and in their market. So the solution for us is, once again, to take advantage of the, not people, but the opportunity that it presents itself every time we head into a recession, because we know that self-storage does so well. And so we are in a land grab mode right now, and buying and developing to keep up with the demand for self-storage. So a little bit about my background, what qualifies me to teach you at this summit. First of all, I live in Indianapolis, happily married with 3 amazing kiddos. From 1993 to 2005, I cut my teeth in real estate by buying and selling single-family homes and apartments. And then in 2005, I bought my first self-storage facility and saw the light. And we sold all our apartments and houses. And to date, we've bought, converted, and developed over 12,600 self-storage units and over 2,100,000 plus square feet of self-storage nationwide. We've done that by raising over $50 million from 300 plus private equity partners, folks like yourself that invest with us as limited partners using self-directed IRAs. And I'm a regular speaker for shows like this and industry trade shows for self-storage and investor groups. I write many articles for the industry. I'm on many podcasts, and we have our own as well. In 2007, I founded a national self-storage coaching business, which was good timing as we were heading into the last recession, as self-storage was on the uptick again and booming. And we began teaching people and consulting with people on how to go out and create their own portfolio of self-storage facilities. So what do we do in our spare time? Well, we take our clients, our family, of course, our students, our joint venture partners and vendors, anybody who wants to go with us on the mission field, and we build houses in the Dominican Republic and in Mexico, and then we give them away. So we've learned from 1998 and 2008, those recessions, what happens in real estate. And then the first one, I was in houses and apartments. The second in self-storage, and I like that one much better. And we've been gearing up and preparing for this one for several years now, and we are ready. So a couple of myths that I wanted to share that maybe some of you have thought about the industry. One is which, gosh, isn't the industry saturated? I see them everywhere. And that's because there's huge demand for them everywhere. We built 9 million units in this industry since the year 2000. It's been the fastest growing real estate sector for 39 years straight, and we've seen 65% growth in the U.S. since 1995 alone. And that's because, folks, 1 in 10 households, maybe one of you, rents 1 or more self-storage units across this country. We're at 93% occupancy nationwide right now, almost full in the industry nationwide, and over 100% occupancy with waiting lists in the major metropolitan statistical areas. That demand has been driven over the years by baby boomers who have done well and have bought boats and RVs and can't store them in their neighborhood, says the Homeowners Association. And then as our baby boomers downsize when the kids move on, extra stuff goes into storage. When they go into assisted living, they downsize again, and it goes into storage. And then when they pass on, we settle the estate. And once the will is done, the heirs, us kids, and those who are remaining here, our loved ones, there's some of those things that we just don't want in our house, and so we put it into storage for keepsake because they are keepsakes and they are heirlooms, and that has been driving self-storage. Millennials, no different, for those who may be fearful of that. The millennials are minimalist by nature, but they like experiences, and that means also boats and kayaks and canoes, fishing equipment, camping equipment, mountain bikes and road bikes, and anything else, so that when they live in their tiny houses and apartments or go on adventures and give up their lease on their unit for a while, then they put all their extra stuff into storage. And so don't worry, folks, the millennials are keeping this industry afloat and also making it surpass the demand for self-storage as the boomers did. Well, another myth is that when I heard getting into the business was that these things are cash cows. Well, I needed to see the math behind that to understand. And so when you look at the industry, it is most commonly compared to apartments because they're very similar. They're multi-unit commercial real estate. They're usually next to each other. When one is being built, another one's coming behind it because of the demand for storage from apartments. But when you peel back the onion, you see that apartments only get $1.02 per square foot per month in rent across this country. That's the average, says the National Apartment Association. Whereas self-storage, says the Self-Storage Association, gets an average of $1.12 per square foot per month across this country. You may find that hard to believe, but for a metal box on a concrete slab, but the smaller the unit, the higher the rent per square foot. And apartments, by comparison, have a 49% expense ratio when you factor in all the returns, or when we have a turn, then we have to fix it, repair it. The back rent is a lot, and late fees, whereas with self-storage, we can control that much more, and so the expense ratio is only 31%. And so therefore, there is no myth. Self-storage facilities are cash cows, outpacing apartments and other asset classes in real estate. That's why Inc. magazine said self-storage is the number one industry to start a business, not only in real estate, but number one business in this country. The Wall Street Journal says, forget about stocks to build your nest egg in your retirement. Use self-storage because it is the most profitable. Bloomberg also states the best U.S. real estate investment is self-storage, and Yahoo also looking across the investment landscape and talking to and working with folks like yourself, saying that here's an alternative place to store your money, you passive investors, 483% return in this sector, which is incredible, and we've been a part of that, and we've seen it, and we absolutely love this humdrum way to invest in real estate because it is producing incredible returns and expect it to continue to do so at 134.7% growth in the industry throughout 2024, says the Express Wire. Lenders also, for us, for the owners and operators, love self-storage because it has the lowest loan loss at only 1.1% and the lowest default rate on their loans at 6.34% compared to all of the other commercial real estate asset classes. Apartments, again, by comparison, have 4 times the loan loss and default rate. They default 4 times more than a self-storage facility, which makes it the easiest for us to finance. Savings and loans, credit unions, community banks, they love self-storage because it has those low rates. The SBA has an 85% LTV program with a 5% seller carryback, which allows us to get into our facilities with only 10% down using our private equity partners, some, again, like yourselves, and hedge funds, and the crowdfunding sites where we can crowdfund these facilities as well. Again, a quick look around the investment landscape, and maybe some of you have already done this, and that's the reason why you're attending this session, as you've seen that self-storage has outpaced all the other asset classes, and that's why private equity is pouring their money into self-storage, especially during these times right now. And why investors are attracted to this property and this asset class? Well, for the reasons that we just mentioned and more. The unglamorous self-storage industry is prosperous for investors and individuals for a number of reasons because it is recession resistant and inflation resistant. And that's why Motorola's founding family is pouring all kinds of cash into the self-storage sector, and they know a thing or two about investing. Well, from an owner-operator standpoint, but also the reason why, once again, we get such high returns is because it's very easy to manage. It's not very management intensive, and there's 3 steps to getting paid in self-storage because we have the protection of the lien laws in self-storage, which protect us as an owner, versus the eviction laws, which protect the tenant in apartments and single-family rentals. So step 1, when rent is late, we get to remove their gate code so that they can't get into our facility using the keypad. Step number 2 is we get to lock them out. This is legal. We get to lock them out, put them into an overlock situation. There's a place on every door lock for 2 locks, one for theirs, one for ours. And if they don't pay, we get to lock them out, and we won't take it off until they pay their back rent and their late fees. And if they don't, then the lien law also states that we get to auction and sell their goods. We have the right to do so after 90 days. And so you've probably seen the shows. Very, very similar. We open the door, they cannot walk inside, they take a look after 5 minutes. The award of the unit goes to the highest bidder, and then we've created another unit immediately after they buy it because they put their lock on it and we draw up a lease. And so we get paid our back rent, our late fees, and then we create a new renter right away, which is the way it should be. We are protected as the investor by these 3 simple steps that is set up with the lien laws, and we get paid 100% of the time without attorneys or collection services or lengthy time and even having to get them out because we don't have to. And quite honestly, in rental real estate, this is the way it should be, and that is the reason why I stayed in this business. Because when somebody moves out on their own, or if we have an auction, this is what I get back. I get an empty unit without carpet to clean or replace, or drywall to repair or paint, or plumbing to repair or replace, or appliances, or windows, or mold, asbestos, or lead to abate because there's no plumbing or water. There's no contractors to babysit because there's nothing but a metal box on a concrete slab, and no recurring renovations on an ongoing basis because of that, the fact that that's what that is. And so I don't have all those contractors, so we don't have all that work. When it goes vacant, I use my 200-mile-per-hour blower. My manager does. I don't. Blow it out, and we move in the next person waiting in line in 30 seconds. And so and if we don't have a manager, then our regional supervisor does this because our sites are run, as we said before, by way of touchless rental and virtual management. When somebody walks into our small office in the area, the vestibule in our facilities, they're greeted by way of a live person on a screen at this virtual management kiosk, and then they complete their transaction, and including up to and also, if you can see here, buying their lock through another kiosk. They get their gate code to get into the gate. They can get a key fob or use their smartphone to access the electronic lock on the unit. And now we run our business with a smartphone. Our tenants can come in and out, and our managers can now lock or even do the overlock because the lock is on the inside of our units, no longer having to go out and put those red locks on that you just saw a minute ago. We rent our units by way of responsive websites, which means it responds to whether our clients are on a desktop, a laptop, an iPad, or on their cell phone, which, by the way, better than 83% of all rentals are now coming from a smartphone. People are choosing not to come into the facility, and especially these days, people don't have to. So we found a way to utilize the technology available in the marketplace as well as in our industry to run our facilities virtually all through the internet without coming into contact with a person. We also, at our sites that do have a manager, we do run facilities if we choose to. You don't have to in our industry to have a manager in place that sells locks, boxes, and moving supplies. We offer record storage and shredding services. We have billboards and cell phone towers that we lease out on our land. We can offer temperature control and wine storage. We offer renter's insurance to protect their goods. We make a cut off of that. We also offer vending machines. The vending companies come out, we supply a plug and get a split of the profits. And our managers can offer eBay services to sell the clients' goods. If they're a professional eBayer or Amazon dropshipper, or even if they just want to sell their items, we will help them to do that for a fee and also pack it and ship it off for them as well. And then, of course, truck rental from U-Haul and Budget and some of the others out there that we make a profit from without any cost on our own by having any of those trucks there. We just do the paperwork. So over 40 plus different profit centers that we can add to a self-storage facility to increase the value to ourselves and to our investors. For all those reasons and more, again, that is why Alice Chung has written the article in the Commercial Property Executive and why she covers self-storage and says that it is the recession-proof sector in all of the passive investment landscape because it outpaces all the others and does so well during a recession if we look over a 10-year period. And that brings me to the top 10 reasons why I love self-storage and why we find it is the best play because there's over 25 plus million units nationwide that we can invest in and we develop as well. It has the highest demand and it is the fastest growth sector. It's the easiest to fund. Banks and SBA and private equity loves it because it is so recession proof. It is the highest profits and cash flow per square foot compared to all other asset classes as I showed you, and it is also the easiest to manage, therefore the lowest expense ratio because we can use the kiosks and the internet to manage our facilities. We can increase the value with profit centers. And it is proven to be recession resistant as well as inflation resistant. Of course, as an owner-operator, I like the fact that there's no tenants, no toilets, and no trash at our facilities. That's what makes it easier for us. So we've taken this business model since 2005 and just replicated it all across the country, buying existing facilities, creating value in those, adding additional units, and developing facilities, and gotten to the place now where we have over 12,600 units nationwide and over 2 million square feet. And we've done all of this by syndicating our projects with our private equity partners like yourself using self-directed IRA funds to bring us to that place where we are now in the top 50 largest syndicators and owner-operators in the country. So what does that mean to you? Well, 3 reasons to invest in self-storage now is because self-storage is red hot, as we've seen, and it'll continue to heat up as we capitalize on the recession. We have low interest rates right now, high demand for self-storage, and a lack of development in many areas creates higher demand yet again and higher returns for us. And it is the most recession-resistant, inflation-resistant opportunity in all real estate as well as in the investment landscape right now. So if you have any other questions that you would like, I'm sorry for the rush. 15 minutes to share the ins and outs of self-storage, but happy to be able to present and teach you as much as I could. Again, my name is Scott Meyers. I am the principal and founder of Kingdom Storage Holdings. You can reach me at 888-693-5999. or by emailing me, scott@selfstorageinvesting.com, or visit us at www.passivestorageinvesting.com. And so with that, it has been my honor and a pleasure to present to you the best asset class and why we love it at this Investor Summit. And I hope to hear from you very soon. Take care now.